Hi, you're watching Money9. I'm Sakshi Batra, and with me is Rahul Arora, CEO of Nirmal Bank. Thank you so much, Rahul, for joining in yet again. Well, the markets have closed with giving a big thumbs up to the budget this time around. There's a second biggest point gain that we've seen for both the benchmarks, Nifty and the Sensex. The Nifty Bank is at an all-time high, so the markets have clearly been really happy with the budget announcements today.
There have been, Sakshi, and as we were discussing, when we chatted a little earlier, and the Prime Minister was making that point as well, that this is a job creation budget. And either you stimulate demand by putting money into the hands of people, or you basically go out there and create jobs. And I think in this budget, the focus has been on the latter. And the kind of expenditure that we're talking about, almost 5.5 lakh crores, which is about a 25-30% increment, if not more, over the previous budget, I think it's quite remarkable. I think obviously there's going to be a lot of resultant impact on a variety of industries, whether you take housing, steel, cement, and then there's a huge trickle down effect of all of this. So I think on every which parameter, the fact that no negative surprises came through by way of a COVID cess or a wealth tax or anything of that sort, or a long-term capital gains tax which the market was fearing, and that the government has taken the onus on itself to go out there and do infrastructure spending is kudos to them. And I think the market has responded in its entirety. I don't think it would have given a better salute to the budget.
Absolutely. And you've been talking about in the previous chart as well how this will actually go down in the history as one of the most momentous and historic budgets that we have seen. And the markets have also fairly reacted to that. But I really want to bring out the point that you were earlier mentioning to me. And that was about that in the, history of your covering the markets in the last two decades or so, you've not seen when a fiscal deficit number has come as huge as over 9% and, overshooting the target by a huge margin, yet the markets have celebrated. So what could be the big reason?
So, Sakshi, so being a student of economics, I'll just break it down for your viewers very simplistically. So the formula for calculating GDP is C plus I plus G plus X minus M, where C is consumption, I is investment, G is government spending, X and M are export and import. Now, given the fact that the entire world has just come out of a pandemic and global demand itself is an issue, the export and import component is not entirely in your country's hands. And India is not necessarily a price setter. It is more a price taker because we're a net importer of everything on an aggregate basis. So you're basically left with CING, which is basically consumption, investment, and government spending. Now, this pandemic has resulted in very large job losses. And for people to just go out there and start consuming just because the lockdown has ended and life is getting back to normal may be a bit of a stretch. There have been people who've had jobs, who've got salary increases, but there's a very large part of India out there that's been at the receiving end of this pandemic. So I don't think the C part of it was going to be something that was going to drive you out of this pandemic either. You were basically left with ING, which is basically the corporate India investing or the government, sort of taking or biting the bullet, so to speak. In this case, Sakshi, I think it's basically, who blinks first. And typically when you talk about investments, and regardless of which country you look at, it's the government of India, it's the government of the day that has to blink first. And the government has not only blinked, it has literally taken the bull by its horns and said, okay, I'm here, I'm going to invest. My interest rates are really low. I expect you to follow suit. I think private capex is going to follow in a very material way, and which is why I was alluding to in our previous conversation as well, that the government does not need to achieve everything it has set out. Even if it gets to 70% of what they have set out, India could be in a very different place 4 to 5 years from now, because announcements are one thing, these capacities coming on is the next thing, and then monetizing these capacities is the third step. So there is a process. So what you've got today is a salute from the stock market in terms of acknowledging that we need to get there. By the time that process is done, I think, by the time the next general elections come up in FY24 or 2024, which will be FY25, you could land up, God forbid, there is nothing else that goes wrong by way of a pandemic or, anything else. Ceteris paribus, I think this will lay the foundation for a very, very strong growth for the next 3 or 4 years.
Okay, so which are the sectors and the themes you think will be important for all the investors to really watch out for? There were a whole host of announcements. You did mention infrastructure, steel, cement also, and all of these stocks were really firing away today.
So, Sakshi, the way it's, traditionally when a foreign investor looks at India, he or she typically looks at consumption as a very big theme. through the pandemic, because everything has moved in such a material way to digital, IT has done really well. And of course, pharmaceuticals, it doesn't take, there's no rocket science, so you don't require Einstein's brain to figure out why that has done well. So these have been sort of the flavors of the market. But I think there is a bit of a tectonic shift that started happening, not just in the budget, but if you go back a few months, actually, the PLI scheme, the
Yeah.
production-linked incentive scheme, that was not announced in the budget. I mean, so it told you that the intent of the government was to start manufacturing contributing more to GDP. It's almost ironic, Sakshi, that 70 years, 75 years post-independence, every monsoon we look up to the clouds and say, barish achhi ho jaye is saal, agricultural output acha ho jaye. And
Bilkul.
it's kind of redundant. The fact is that if India is to take that next leap up, you have to get manufacturing as a percentage of your GDP higher. So I think the seeds of this was sown a few months back. Some of the contracts have already been awarded. And I
Hmm.
think going forward, it is going to center around manufacturing. Like I said, it will result in demand across sectors. So,
Yeah.
while everyone was focused, and you mentioned in one of your earlier comments about the bank nifty, I mean, just take a look at what happened to Ultratech today, for example. So I
Yeah.
think, cement, the prime minister is talking about affordable housing. The paint sector could be something that you could look at. The ceramic sector, people putting tiles in their houses. A lot of ancillaries, consumer durables, electricals, washing machines, refrigerators, stabilizers. So, you have a whole host of companies like Whirlpool, Wheelguard, Havells, Kajaria. The world opens up, in many ways. So I think manufacturing could be the next big theme to play. And let's not forget, Sakshi, that there's been an increase in defense budget as well. And
Yeah.
there's a lot of talk of privatization. So, that could be another interesting sector. And, I was actually on another channel just a few days back, and they were asking me what's my one big bet from the budget and one big investment idea. And I told them insurance is going to be it.
Yeah.
And look at what's happening. I mean, they've raised the FDI limit in insurance, and the prime minister through his schemes is trying to get everyone insured at a very nominal premium. And you've seen the reaction on HDFC Life, Max Life, SBI Life, and the other life insurance companies. So that could be another very, very big theme to play. So I think it is possible that IT pharma consumption takes a backseat, and you have sort of maybe insurance and the manufacturing sector that's probably going to prop itself up from a stock market perspective in the foreseeable future.
Okay, so insurance and manufacturing, two key themes that everybody can watch out for. But what about the banks? Would you still be chasing the banks? We've already seen them run up quite high, apart from the last week's profit booking and the selling that we saw on some of the days. But today, again, all-time highs and the kind of themes that you've already talked about, privatization. We've already heard, even in the PSU banking space, the finance minister mentioned that two other PSU banks other than IDBI would be up for privatization, even one general insurance company. So is that the space that interests you from here?
So, see, Sakshi, the thing is, there is a Supreme Court dispensation that's underway, and if you've seen the quarter 3 results of all the banks, they have disclosed two forms of NPS. They have given you the reported NPS, and they've given you pro forma NPS, assuming the Supreme Court dispensation was not in effect, and those numbers are substantially higher, and therefore the provisioning of these banks has substantially gone up as well. Now, the point is how much of this actually turns bad. That is step one. And of what turns bad, how much is this bad bank concept? And it's
Yeah.
not been called a bad bank in the budget. They've sort of looked at an AIF way of going about it. But how much of this can be sucked into that is the question. Uh, Privatization is very good. But let's not forget, whenever, if a private sector bank is going to be taking over a public sector bank, you're going to have challenges in terms of integration, sorting out those NPAs, labor unions, etc., etc. So I think all of this is very good directionally. But would I buy banks as on today? I would buy the banks where I think they are more digitally inclined to reduce their cost to income ratio. So, maybe an ICICI bank or an IndusInd bank, because HDFC Bank is, pretty much, you talk to anyone on the street and it's such a consensus view on HDFC Bank. So
Yeah.
I think something like an ICICI Bank or an IndusInd Bank, I'm not here to guess which two public sector banks Madam Finance Minister was referring to. I guess we will know that in time. But I would be a little jittery going lock, stock, and barrel into the banks at this point. But yes, definitely, at any price, there is going to be a few stocks in every sector that you can still buy.
Hmm.
Even pharma index went up many fold, there were still some stocks that were coming to you at 15p, and you could definitely nibble into those. So, like I said, I gave you a couple of examples of banks that are, sort of going very sort of extensively into the digital fold, and I think
Yeah.
there is good room to grow over there.
Right. And what about the auto sector? The vehicle scrappage policy has been announced. Of course, the details are still awaited, and we'll have to see how the ministries take up, in future course. But this was an ask from the auto industry as well. How do you expect the industry and the sector and some specific stocks also to move from here?
So it's not that the demand is going to be created overnight. So, whether you look at passenger vehicles, heavy vehicles, light commercial vehicles, I heard the minister on television a few minutes back, and the numbers are either 20 lakhs, 35 lakhs, 30 lakhs, depending on which vertical you pick up of the lot. So it's not that, this demand is going to come in straight away, but yes, structurally, this gives you visibility for volume growth. It also
Okay.
gives you, not only does it give you visibility for replacement demand, it gives you visibility for auto ancillary demand also. So it will be a trickle down effect into the auto ancillary companies as well. In India, typically as an investor, you pretty much invested either in Maruti because it's pretty much the only pure play four-wheeler company you have,
Yeah.
or you've invested in, something like a Mahindra if you wanted to play tractors or two-wheelers. I think the time may be coming to look at the commercial vehicle cycle. I think we're at a bit of a cusp, and with this scrappage policy coming through, I think it could be a very, very good story to play. You may have already noticed what's happened to the Tata Motors stock. I think Ashok Leyland could follow suit. M&M has doubled during the period of the lockdown. But the fact is that when you're so depressed and you've been so pressured down, even if the stock doubles, optically you think it has doubled. But the earnings or the price to earnings multiple could still be substantially lower compared to where their peak value could be or what the earnings prospects could be. So I think CVs may not be a bad area in autos to go for,
Yeah.
as opposed to going for the traditional two-wheelers or your four-wheelers that you've been going through. So and the other thing, Sakshi, is I may even go in for auto financers, something like a Chola or an M&M
Okay.
Finance, or a Shriram Transport Finance. Why just, so we get very fixated when we talk about something, right? We don't look at the derivatives or the ancillary plays that could benefit. I mean, I
And
could throw
auto
another.
parts has been in news today, like in the FM speech as well. There was customs duty also that was talked about there. So that'll be an interesting space to watch out for too.
Absolutely. And I mean, since you're talking about banks, insurance, why not throw in another part of the market as well? Rating agencies. I mean, if these
Yeah.
are projects that are going to come up, CRISIL, ICRA, and CARE are going to have to go out there and do feasibility studies and rate them. That's business for these guys as well. So I think you just need to be smart about the way you approach it. My only advice to your viewers would be to buy good companies with strong balance sheets and cash flows, or where you have visibility of debt coming down in a very material way. Don't get sucked into buying anything and everything just on an announcement. That could just land up backfiring on you in ways that the market could go up, but your stock won't go up. So be very
Yeah.
careful before getting sucked into what you're buying. I mean, you mentioned auto. I'm sure there are some companies that are not doing well in auto. And, if your viewers get stuck in one of them, then God help them. The market could still be up 15-20% from here, but his or her stock may not perform. So focus on good managements, good balance sheet, good companies, good cash flows. And even if the company has not demonstrated cash flows to date, as long as you have visibility that those cash flows will come through and the debt of those companies will go down, those are the kind of companies you need to be investing in.
Okay. Lastly, more upside for the markets in 2021. Good time to invest for investors right now.
If you asked me, whether I'd be owning a Rolls Royce in the next 1 year, that would be an easier answer. Give.
Yeah.
See, we were at a 7,500 Nifty in March of last year. We were about to kiss 15,000 before the correction started. So for practical purposes, the index doubled. And that is just pure arithmetic. You corrected from there, you've had a rally today. My gut is that you probably won't exceed 15,500 on the Nifty for this entire calendar year. I know I'm making this call too early in the calendar year. We've just down about a month. We've got 11 to go. But I think for investors who are buying the market, the headline market today, I think you should expect just about a 10 to 12% return. If you get anything more than that, it's a bonus. If you get anything less than that, it's because something went wrong that we don't know today. Ceteris paribus, I think we're good for a 10-12% return kind of a year. It's going to be very long before we have the kind of returns that we had over the last 1 year for it to come again, regardless of what happens around the world and how good things are looking. So I think expectations need to be moderated and calibrated, just like in anything in life. You don't have too much meat at one shot, and if you
Yeah.
do, you have to light the next day. Or run a little bit more. So it's the same thing with the markets. I mean, you've had a stupendous run from 7,500 on the Nifty all the way to where we are. I think a 10-12% kind of return from where the close is on budget day should be, I think you should take it with both hands.
Okay, thank you so much then, Rahul, for speaking to us for the second time on a day like today, when it's not just the big budget day and the markets have run up too high, but it's your birthday as well. Here's wishing you once again a very happy birthday, and hope you do ride that Rolls Royce tonight around Marine Drive as well. Thank you so much for joining us on this show.
Thank you, Sakshi.